Hi everyone, today will be a review of a euro trade in the New York kill zone. I usually trade exclusively London kill zone, but since at 1st April the London kill zone was showing itself quite badly, I decided to temporarily switch to the New York kill zone, as the main setups were in the New York kill zone. This is based on my observations of the chart during the first 2 weeks of April. So let's go directly to the euro chart. The first time frame we will be looking at is the weekly time frame. As we can see on the weekly time frame, we got a sweep of the previous week's low, which basically gives us an understanding that the LTF price is likely to rise. This is the first important thing to notice on the weekly chart. Now, let's take a look at the H1 chart. As we can see on the H1 chart, we have the previous high of the day, aka Monday's high. Also, you can see at the bottom we have the Asia low sweep, which acts as a manipulation for us with an obvious pool of liquidity in the form of Monday's high. Also, you can remember that we have the sweep of the previous low of the week, from which you realize that the price is likely to rise, which is confirmed from the H1 chart. Now let's look directly at the M5 chart to start with what we remember from the H1 chart, that the Asian low closed as a liquidity sweep. Then you can see on M5 has order flow that price is testing FVG and continues to rise. In the area where we have FVG marked in orange color, you can see a liquidity sweep of M5 with subsequent disruption of the structure. It was at this point that I used a market order because we had a clear near pool of liquidity in the form of BSL. And from the H1 chart, we remember that the next obvious pool of liquidity we have will be the maximum of Monday, so the price will tend towards it. And also the trade started exactly after 7 a.m., according to the standard kill zone, 7:10 a.m. Again, we remember the logic and the idea of trading to RR. We should open a trade up to the nearest liquidity pool and close it at the level of 2% in relation to the order flow yellow. And also liquidity is not exactly on the liquidity pool, but above or below it, depending on the direction of price movement. Also, let's see in this video a continuation trade, also with fixing to RR in relation to order flow to the obvious pool of liquidity. In this case, used the news liquids at 8:30, which gave impetus after the test M5 FVG, and close the trade on TP. I hope this video was useful to you. Thank you for watching it.